Hey guys, welcome back to the channel. This is Shri Shiva from Trading Explained, and today's video is going to be a bit different from our usual videos because in today's video I'm going to share my screen to help you understand how stop loss hunting exactly works. I have previously made a video on stop loss hunting, but in that video I have used my hands to explain how stop loss hunting works, and I guess that's not the best way to explain things. So I thought let's make another video on the subject because many people are demanding the same how stop loss hunting is done. Please help us with that because we are getting hunted every day. And this is a thing that happens every day. Every day people are getting hunted. Every day people are right and they're still losing money. Like if you analyze a particular stock and then you take positions in that particular stock and then that stock actually hunts you out and then moves towards your designated direction. So that hurts a lot. And to remove that from your system, you need to understand how stop loss hunting works. And that is exactly why this video is being made today. So let's start the video by understanding the market structure first. What does market structure mean? It basically means how market operates in given situations. So when it is an uptrend, so in uptrend, how does the market operate? Market goes up, comes down, goes up, comes down. So basically this pattern that gets continued, right? In downtrending market, how does the market operate? Market goes down, then slight move that goes up, come down, goes up, comes down, goes up, comes down. So this is basically market structure. I know that you probably know all this, but it is important because stop loss hunting happens in these structures only. There's nothing different that's going on. These are the basic structures on which everything is happening around, all right? And then there is sideways structure, wherein market goes this and creates some kind of rectangular pattern or box pattern, and then finally breaks about this pattern, right? These are the basic theoretical things that we have been taught about technical analysis. But what we haven't been thought about is stop loss hunting. Whenever we talk about stop loss hunting, people think it is a myth. People think that stop losses are not hunted. It is just a myth. But no, it is absolutely not true. Stop losses are hunted, and the people who are moving markets, the biggies who are moving markets, have the data of your orders. So all these brokers, they sell their data to these big people, and they know where exactly your order is lying. So whenever the order is there, the market will come there, take your order, take you out, and then go in the direction that you thought the market would go to. So let's understand what and how exactly it happens. All right. So let's say market is going up. Without any retracement, the market is going up. So what do you think people are going to think at this point? Like people get FOMO, right? People get the fear of missing out. I cannot miss on this more, right? This is the feeling that people get. And then people start entering randomly over here, over here, over here, without any setup, random entries, right? Market knows it. Market knows that people are going to enter at this point. So what does the market do? Market retraces back. All right. So now this is the retracement where people who bought over here are getting panicked. So these people exit, and then when these people exit, market resumes its up move. So this is why the retracement move is there. You probably might have known about this, right? But what happens is we have taught about this structure that market goes up, comes down, goes up again. There is an addition. What is the addition? So now at this point, probably everyone knows that this was the resistance. And whenever market breaks above its resistance point, you should buy. This is what books teach you. This is what theoretical analysis teaches you to go long on any stock or any asset whenever the resistance is breached. So at this exact point, what market does? Market comes down again. And now imagine where people are going to panic. Those who bought over here. So anyone who bought markets at this point or went long about the breakout of this resistance are going to panic as soon as the market drops down below this resistance, right? So this is where the stop loss hunting kicks in. So let's understand practical examples of how things happen in markets. So this is Nifty's chart, all right? This is exactly what I just told you about, just in real time. So this is Nifty's chart. This example is of 23rd September. Let's see what happens. There was this big up move in the morning session itself. Then there was some consolidation, some fizz out. Probably at this point, people were buying too, so the markets came down, went into sideways mode. But now, if you see, it created a kind of resistance. So, what has been taught to us? Whenever market breaks above this resistance, you have to buy. This is what you have been taught. This is what we all have been taught. So, what happens whenever it breaks above? So, now you see the market is breaking above. The market has sustained above this resistance. What do you think people are going to do? people are going to go long on Nifty. People are going to buy calls, sell puts, buy futures, or any possible mode in which they can go long. They're going to do that. So this is exactly what we discussed. Made high, went into some consolidation, and now this high is breaking. This high is breaking. What would you do? Probably you would buy too, right? Markets knows all this. Let's see what happens next. So this is a basic hunting. This is, a very basic, giving you a basic idea of how stop loss hunting operates. This is happening every day in probably every stock that is getting traded on the stock markets. And this does not apply only to Indian markets. This is happening all over the place. Be it crypto, be it New York Stock Exchange, be it London Stock Exchange, be it anything, it is happening all over the place. So let's see what happened over here. There was this breakout. There was this rise in volumes also. So people will be like, okay, this is the perfect time to go long. And then the markets come down. Now tell me one person who has bought markets on this breakout who is not going to panic after looking at this. People are going to panic, right? And the market knows it. Mr. Market knows it all. People are going to panic once it breaks above this high. People, people who bought at this point are going to panic the moment it comes down below this. Most people are going to have their stop losses just immediately below the resistance that was there. Others are going to have a bit below it, but market takes them out all. And once all the stop losses are hunted, once each and every person is out, see what market does. Boom. Surprise, isn't it? Well, it is not. This is what happens every day. This is what is not taught in books. This is what experience gives you. This is what experience tells you. We'll look at another example, but first we'll understand on a pictorial basis. So this next example is going to be of Bank Nifty. And why am I choosing Nifty and Bank Nifty? Because people choose to trade Nifty and Bank Nifty more than anything else. Okay, people choose to trade index not only in India but in other countries as well. People choose to trade index more than the stocks because liquidity is there, volatility is there, everything a trader can ask for, it is there, right? So what happens is market creates this sideways zone. Okay, it goes up, comes down again, goes up, comes down again. So at this point, you have to understand that Bank Nifty and Nifty are in a huge uptrend. All right. Nifty has went from levels of 7,500 to now almost 18,000 plus, and Bank Nifty has went from levels of 17,000 in the drawdown of Corona to now almost above 35,000, 40,000 almost. So you have to understand that the major trend here is the uptrend. And whenever what we have taught, whenever the trend pauses or halts for a time or some time, it will always continue with the major trend. Meaning, if the previous trend, the major trend is positive, this sideways consolidation breakout will always be on the positive side. This is what books teach you. What books don't teach you is this. So at this point, pretty much everyone is going to have stop losses below these levels, right? Because this is acting as a support. Anyone, people are noticing that market is coming down, going up, coming up, down, going up. So people are going to buy on these levels. People are going to accumulate Bank Nifty on these levels, right? Let's see what happens. So here's Bank Nifty, and this is the chart which I was talking about. This is the chart which I was talking about. So what do you see over here? This is absolutely the same thing which I just showed you, just in pictorial format. So going down, coming up, going down, coming up. And now if you see, there are two important levels at this point. Let's mark those two important levels. Those two important levels are what? They are going to be the lows and the highs of this consolidation zone, right? The low and the high. Okay, so we have marked the lows, we have marked the highs. So what people are going to do essentially are going to people are going to accumulate these levels, right? People are going to accumulate Bank Nifty at these levels, these levels. What happens next will probably surprise you. Let's see. This is Bank Nifty. Bank Nifty just doing its regular thing, and now you have to carefully look at what's happening at this point. So this is the low, right? This is the low. You have to check the lowest point of this in decimals because stop loss hunting usually happens in decimals. So look at the value of that particular low candle. The low of that candle is 39,483.35. Remember the figure? I'll put it on screen somewhere over here. 39,483.35. Now let's look at this candle, this green candle, which made a low of 39,482.35. Again, 483.35, and here 482.35. 1 rupee down. If I remove this, you will be able to see it barely came 1 rupee down than the support that was there, because people place physical stop losses just below this level. Market knows it. Market knows it. People are going to place those physical stop losses just in case they do not want to go into heavy loss, because whenever such breakout happens, it usually happens in a ferocious way and people want to avoid it. Market knows it that people won't keep stop losses over here or here. They will just barely keep at this point, or just barely few paisas or rupee below that point. Market comes in, hunts these people down by 1 rupee. 1 rupee is enough. You might ask, hey Shrish, this what 1 rupee is going to do in such huge market? No. Just ask yourself, how do you place your stop losses? That is exactly how other people place as well. So this was a case of stop loss hunting in sideways market. And then there was this. Just look at the move. Just look at the move. Isn't it amazing? Now you might say, hey Shrish, now we can go long on the breakout of this candle as well. Absolutely you can. But do you think the markets are going to give you those entry? Like, in hindsight, these charts look pretty easy, right? But when the markets are live, markets do not give you those entries in such cases, because the markets are, number one, volatile, and number two, they are, they are intending to take out pretty much everyone and not allowing people to take entries at this point. Even if someone enters, having late longs into this, it makes such candles which make people panic. People get out, and then market moves in the designated direction. So I hope you have been understanding how stop loss hunting works. I hope you are getting what I'm trying to say. That the chart that is visible to you is visible to pretty much every person who is looking at that chart. So why do you think it is going to work only for you and not for them? So, and ask this question to yourself the next time you're taking any trade, that is this stop loss right? Am I going to get hunted on this particular trade? If I am going to get hunted, why should I be trading it? Whether should I be trading this or not, or should I be waiting more? Should I be waiting to, enter after the stop losses have been hunted? Ask these questions to yourself the next time you trade, and your trade pretty much will be, improved a lot. Your trading will improve a lot when you start asking these questions to yourself. So I'll end this video for now. If you like this video, then make sure to let me know in the comments so I can bring more such videos with screen sharing and all. So you can get a better idea in pictorial format of the things that I'm trying to explain. So we'll keep this video for now over here. I guess it's not short. I was going to say let's just keep this video short, but I guess this is not a short video. It took a lot of time, I guess 10 minutes or so. So we'll close off for this video. I will see you in the next one. Until then, you guys take care. Bye bye. Peace out.